Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you as always. We got some news today. We have a merger in the industrials. We have more bad news for CanTrust. The analysts are out heavily today with some ratings upgrades and downgrades. We're going to talk about the follow-through in yesterday's action in the healthcare sector, and we'll take your questions from our chat. Our guest today, Raghee Horner, a Forex and currency trading mentor for Simpler Forex. She'll be on with us at 8:35. In the meantime, Joel, what's happening here overnight?
Green on the screen at new all-time highs. Barely got below unchanged. Unchanged was 3004 pre-market low, 02 and a quarter. So there's a target on the downside. On the upside, we took out 07 and a half yesterday, and we are remaining above that level. So there's your key to the rally on the upside. 1275 pre-market high, new all-time high, nothing there. Crude up a nickel at 60 and a quarter. You have gold up 230 at 1409, silver flat here at 1515, and Bitcoin really not affected by President Trump's statements. That's basically flat here, trading at 11,800. Triple D, we start the pre-market show at 7:45. It doesn't seem like there's news, but we bring you on at 7:47, and looks like you had some action last night.
Oh, yeah, there's always news. You just got to dig for it sometimes. But, there was some big headlines. We do have a merger here this morning. We have another pot stock headline here. We got Ford taking off this morning as well. Let's go to the pot stock headline here. One that Alan Brockstein, he was talking a bit about on our show. I mean, this stock's got all kinds of trouble. CTST, new headlines last night. Looks like they're going to stop, sales here, at least temporarily. I mean, all kinds of stuff going on here. Spencer, give us the highlights.
They have halted all cannabis sales in Canada while Health Canada reviews what actually happened at this Ontario.
What was the behind so something happened at this plant, and it's obviously Health Canada's involved here now.
Yeah, here, going back to, this is the headline here.
Yeah, give us the fill us in here.
We had this. It was originally, this is from Monday morning, right? Health Canada notified the company that one of their facilities was not in compliance with some regulations and had placed a hold on their inventory until the investigation was complete. So, apparently they had an unlicensed grow room, essentially, and so that was the Monday morning headline. We had Alan Brockstein on our show that day, calling for the CEO to apologize and resign.
Yeah,
and now apparently not only are they halting their inventory, they're just halting all sales.
I mean, just look at what it's done since Monday. It's been $4 down through $3. Now it's $2.71. So this got halted last night, or this didn't get halted. This news came out last night. I tried to short it, but we have this tick rule that if the stock falls more than 10%, you can't hit the bid to get short for that day and the following day. So when the thing's moving around 10% a day, it's just always basically under that rule. So people who don't think we have an uptick rule, we do. We have a more stringent one even, because even if that bid is an uptick, you still can't hit it. You have to get on the offer. So I threw out my offer, and obviously trying to, get short some. I got short a little piece. I was trying to get short a lot more, and then the stock obviously collapsed after that. But I don't know what the reason is for this rule that they have. They think it's helping, but I think it just slows down the price discovery process. I've complained about this tick rule before. I think the uptick rule was useless before, because there was always ways that professionals went around it anyways way back in the day. But I mean, the uptick rule in itself, people think this caused, the market crashes, and this was a major issue in the financial crisis. It wasn't. The major issue in the financial crisis was banks loaning money to people who they shouldn't have been loaning money to. So, and the people who are saying the uptick rule caused the financial crisis don't know what they're talking about. But anyways, we still have a tick rule. And I couldn't get short this last night because of that tick rule. It's coming back down here now. So the natural sellers get out okay, I guess. But $2.70 here, 12%. This story does not sound good.
That must be so frustrating when something's going down and you can't
hit the bed. And you know what's even worse? So okay, so I throw out my offer. I'm the first guy. I'm actually literally the first offer out there. And I was the first offer for a few minutes. I guess nobody's trading at 7:30 at night. The high frequency traders are all too lazy. It's bid at 308, and I go hit the bid at 308. I just leave it, and the exchange will automatically put you at 309 because you can't hit the bid. So the exchange covers that, so you don't have to worry, if it's a tick or not. You don't have to figure that out. The exchange will figure that out for you. So I'm automatically on the offer at 309. Somebody lifted me. I got done on 279 shares or something, really, really small. But anyways, that person who's lifting me, it shouldn't have never been able to lift me. The price would have went down a lot quicker. So that person might have got a better price because I would have brought the price down lower. I was willing to sell a lot lower than that. But because SEC regulation doesn't allow me to sell lower than that, the person who bought those 279 shares last night bought at 309 or 310 or something. Those people are buying a stock price that is priced too high. Sometimes you'll see this happen where a stock will sit there for 20 minutes. There's no natural seller. So on news that it's going down, and everybody will pile on the offer. So you'll see 500 shares bid, and you'll see 50,000 shares trying to sell to the 500 shares, and they can't do it because nobody's got a tick. Nobody can hit the bid, so only a natural seller can come in. I've seen it sit there for 15, 20 minutes, and then people and there might be buy orders that come in. Those buy orders are buying a stock that's completely mispriced right now because the stock wants to go down. It just can't because of SEC regulations. So that's the downside to talking, about, and it slows down the price discovery process. If there's not a natural seller there, meaning somebody that actually owns the shares, it can't go down. So it just impedes price discovery. It's a silly rule.
All right. So you also had some action in that, and then we got a merger, which
HI and MCRN, and you know what they've been doing, the acquirers lately.
Yeah.
Here's the details here, Spencer. I tried to trade the HI side of it, but there was nothing to be had.
Hillenbrand will acquire Millicron Holdings for $11.80 a share in cash and a fixed exchange ratio of 0.1612 shares of Hillenbrand stock. So it's $11.80 plus 0.1612 times whatever Macron is. Millicron is trading at.
So this merger breaks, I think, around 7:30, if I'm remembering from my time correctly here. Actually, no, it was probably just after 7 o'clock. Usually these things, a lot of these times come out right around 7 o'clock. So MCRN pops up immediately. All the news algos all over it, so no chance on that. But I'm like, well, there might be a chance on HI. There's literally no market in HI when I bring it up. So I throw it out trying to get short. I went 38.70, 38.50, 38 and a quarter, 38. There's just nothing there. There's literally no bids, and I'm the only offer in the whole world. So I'm like, okay, well, I'm not going to go below 38 because I don't know how low this thing's going to go. There was nothing to be hit anyways. There was no bids. The first trades you're telling me didn't occur till well after I was trying to sell it, and it went 34 handle.
34.75.
Look what they do to the acquirers. I mean, this is incredible. This is incredible how hard they hit them. And you're seeing this again and again and again. The stock that's paying a premium, if they pay $1 billion premium, they immediately seem to go to the acquirer and knock $1 billion off the market cap. It's crazy, but that's what they're doing. They never did this years ago. Sometimes you would actually see, there's synergies, and you would see the acquirer go up as well. You never see this anymore. The acquirer just gets slammed. I mean, we saw it with AbbVie when they bought Allergan. That was incredible, the AbbVie fall. I never would have thought they'd knock 10 or 12 bucks off the price of AbbVie for buying Allergan. I mean, sometimes these things overshoot. It's the same thing with HI this morning. It's a pretty big deal for them. It's a $3 billion company buying, a company for $2 billion, and they're slamming it.
What did they do? Do your market cap recap?
I mean, I always look at what they're putting in, so it's maybe not quite down that much, but it seems like in a lot of these deals, when they're paying a $500 or $700 million, they're turning around, they'll take $700 million off the market cap of that. I don't think they're doing it in this case here, because I think HI would even be lower if that was the case, but you just got to be really careful here. They're not giving you a synergy, they're not giving you anything. If you're an acquirer and they're paying a premium, they're hitting the stock. I wonder if this doesn't eventually start to hurt M&A activity, because if you're an acquirer or a potential acquirer, and you think, well, if I go and acquire this company, it's going to knock my stock down 10% as soon as I did it, and that's going to hit my bonus. It's going to hit everything else. I mean, why would you go bother even, looking to do deals? I mean, the market just punishes you for doing a deal. It was never like this. Years ago, I can remember trading M&A action back in the 90s and early 2000s, both would go up, and that's not the case now. This has been the case the last few years, but it's really a lot the last few months. They hit the acquirers with no mercy, merciless. And you wonder if it doesn't eventually start to stall out M&A activity if they're going to keep hitting acquirers as hard as they are.
I mean,
how many times are these buying opportunities though? I think back to the Walmart, who they buy, Flipkart, right? Walmart bought Flipkart in 2017.
Yeah, that's a small deal though.
But I remember that morning. I remember they hit it that morning very hard. I don't remember exactly how hard, but they hit Walmart.
They even hit Walmart on a small deal. Well, they hit Cisco. And that's what I was saying. It's nuts because that Cisco deal, who did they buy? I can't even remember the small company. A few days ago, or last week.
Chat us help. Our chat will help us out.
They bought
such a small company.
Acacia.
Yeah, Acacia. So, and this is 4 days ago. And on that initial headline, they knocked $1.50 off Cisco. And I came on this show and I was like, they're nuts. Because this was like a $1 billion premium they're paying. They're knocked $3 billion off the price of Cisco. It doesn't make any sense at all. And Cisco came right back. So that was an opportunity. So sometimes these, who's ever trading these things, just think, oh, I hit the acquire no matter what. It matters on the market cap. So we got a $300 billion company or whatever the hell Cisco's market cap is. I didn't look it up, but I'm sure it's $250 or $300 billion probably. Buying, a $1 billion company. It's a drop in the bucket. It shouldn't affect the stock at all. They're going to knock $1.50 off the price. I hit the buy button on that. So, I would hit the buy button on that. So, that's something to consider. Look at the market caps. This HI deal is a big deal for them. $3 billion company buying a company for $2 billion. That's a big deal. And that's why, for them. And that's why, the stock's getting hit hard this morning. And probably doesn't bounce back as quickly as some of the others.
Yeah, just real quickly, someone's asking for thoughts on Macy's here. And I'm just like, what's the catalyst going to be on this stock?
Nothing. No catalyst.
When's earnings? I'm just asking when.
Well, wouldn't we just have Macy's earnings? We're at the end. They're usually at the end of earnings.
Retail is at the end, so
we're just getting started. Macy's got to be a month and a half away, probably.
Yeah, they're a solid month.
Yeah, so they're a long ways. I don't know what the catalyst is. I mean, retails are all in the gutter. Everybody's attracted. I had this rant yesterday. Everybody's attracted to stocks with nice dividends. But you could argue Bed Bath and Beyond. You could argue that all the way down, and some people did. I mean, yeah, you're still getting paid. But, you get paid 6% a year, but your stock's been down 30% a year. I don't like that math. So I don't know. If I'm looking at investing in something, I want a company that's actually growing. I want a company that's got the potential for growth. Where is the growth coming from in Macy's? These are stores that anchor malls. Mall traffic has been declining for years. They're huge stores with huge expenses when everybody's buying everything online. I mean, this is just a change in the way consumers shop. And this is why these stocks have been under pressure for a long time. Had the ridiculous rally last year. I mean, we've hated Macy's on this show for a long time. And we were dead wrong in 2018 when it went from 25 to 40. I did not see that coming. We ended up being right because the stock's right back down to where it came from. But, I mean, it could have bounced here again. If people are hungry for the dividend, anything can bounce and maybe things change. But as of right now, I don't want to own these stocks because there's a lot of other companies that are eating their lunch in a cheaper way. And, Walmart and Target have kind of figured it out. The big box stores, they're discount retailers. They have an online presence that they're trying, to work, and it seems to be doing a lot better. These traditional department stores that are anchoring malls like Macy's and Nordstrom's and Dillard's, I mean, these things are not doing nearly as well, and they're obviously not doing well at all because of the stock performances. It just tells you. I mean, you can look at Dillard's at $62. Kohl's, I said Kohl's is the one I like the most if I had to buy one, but I don't want to own any of them here. And I would say wait until they stop going down or say something positive or start to figure out the online thing. But these stocks all have major issues. That's why it's got a 7%.
Can I say something positive about Macy's?
Sure. Try to change my opinion.
Yeah, it is probably not going to do a whole hell of a lot, but last weekend I ran an errand out there. I had to return something, and I returned it, and I came back, and I didn't have my credit card. I put the credit back on.
Yeah.
And I'm like, oh man, the hassle and everything. And I'm looking, and I remember like when I got home, I remember dropping something out of my pocket, but I looked on the ground and it wasn't there. So I drove back out to Macy's. I went to the desk where I was at. I asked them if they had the card. They brought the manager down. The manager was like, no. Sorry, sir, we don't have your credit card, but here is, what's your phone number? So this was on Friday. On Monday, I got a call from the manager at Macy's, and he said, he wanted to know if I found my credit card. And he said, because they didn't find it there.
That's because he's got nothing else to do, Joel. He's got nothing else to do.
Spencer calls the spade the nice manager. And I mean, some of the customer service, I've been in Macy's before. Customer service in some of these stores is excellent. I don't think that's the issue whatsoever. The issue is just consumer trends. The younger shopper is not going to Macy's to buy their stuff. They are savvy and they find it cheaper online. They find the deals. And I really believe it's the change in consumer trends. And as you think about this 20 years from now, what's it going to look like? Like Spencer, how often do you go into a Macy's?
Well, not often, but it's mostly because my personal vendetta from having worked there. So.
Oh, you worked there.
Bad example.
Okay, but anyways, I mean, you start thinking like these 20, and obviously Spencer's a little bit older than that, but these 20-year-old shoppers, and I think about my kid at 4 years old. Is he going to be going to traditional department stores? I just don't. It's not like it used to be. It used to be a cool teenage hangout place too, to go to the mall. Remember everybody going to the mall? They don't do that stuff. They don't act in the same ways anymore.
You know what's funny? I just over the weekend was watching Stranger Things on Netflix, which the new season's out. Takes place in the 80s, and one of the big subplots of season 3 is this brand new mall. The show takes place in a small town in Indiana, and they got a brand new mall, and it's like the talk of the town, and everyone loves it. And it's funny because it's like a different era. And
it's a different era.
When I was growing up, malls were still. I think they had lost some of their luster. They were still really cool, but they weren't as cool as they were like in the 80s when it was new, and it was this new way of shopping rather than going downtown to each individual store. It was on.
Yeah.
They still had some of that luster when I was growing up, but not. I mean, now it's not.
It's such a good point you're making, because you think about the traditional downtown where you went from shop to shop, and the malls kind of ate their lunch, and the traditional downtown cores in a lot of cities, and there still is some that do well, but I can think of even my own city in Windsor. I mean, the downtown core really struggles. Stores that are down there have struggled not for the last couple of years, they've struggled for 20 years or 30 years, and that's because everybody went to the mall. But now you're seeing it happen again. And this online presence, the younger shopper, buys stuff online. They're not scared to do it. Me and Joel, maybe traditionally, not me, because I don't buy any clothes. I mean, I wear the same clothes all the time. But Joel, is older, and he's going to go to the mall. He's going to want to try on the shirt. Newer shoppers don't need to do that. So I think, that's the scary thing about owning a stock like Macy's or owning a stock like Nordstrom, is that there's not, the desire to go and try on all these clothes and hang out at the mall, and it's just shopper trends have changed.
Is that the Devonshire Mall? Is that the one you go to?
And that's still huge, and it's not like mall traffic is dead, but it's declining. In my opinion, it's declining. It's not like it used to be. Even when I go to the mall now, I go to some of these and I'm like, wow, it's not even like it used to be like a mob scene at Devonshire Mall, because it was the only good mall in Windsor. And it's, it's still busy, but it's not like it used to be. What store's busy in there though? Yes. The one store where it's always busy and everybody's around.
Apple.
Lulu.
Well, Spencer's got it. Lululemon. Yeah.
I'm always surprised though, whenever I pull up a chart of SPG, Sun Property Group, how well it's hold up relative.
They have. This has been Joel's short for a long time.
Kind of amazing.
Your Tobman though.
Yeah, when was that? We got to roll the tape on that one. That was a retirement trade. How did I mess up on that one?
But you know why too, Spencer? Because people are hungry for yield, and SPG still has a 5% dividend. So a lot of people believe it is safe. Maybe it still is safe, but I would say I would rather put my money in something. If I'm going to get 5% of my money, I don't know if I want it in a property, in a mall retailer.
Yeah.
So,
Well,
and Simon
when you
Property
say-
maybe has other stuff too. I don't think it's just malls, right?
When you say it's safe, you're referring to the dividend, not the company. But
People think it's yeah. Like I'm not saying this SPG is in trouble, and I'm not saying anything they're going to cut the dividend. But what these property REITs, who knows? Longer term. If you're investing longer term, which and we've got our investor hat on fully here. We're not saying any issues here currently with SPG or TCO, but I mean, there's definitely trends. Especially with TCO. Look at TCO, 6.55% dividend now. This is a mall retailer. I think SPG's got some other stuff, but if you go to Taubman, I believe Taubman, the majority of its malls, not Joel.
Oh yeah, and you know
like
what?
ground zero.
I would love to know. There was a point where Taubman, his malls were averaging. Well, he passed away. But like $500 square foot per square foot in sales. For these stores, and now I bet you I'm gonna have to talk to my buddy. I bet you that maybe he's not cut in half, but I mean that's all what the rents and everything's based on is per square foot, and that was a while ago. It was 500 square foot. What's the one place? And I don't know if it's still publicly traded. They do a lot of the outlet malls all over the country. It has a real distinct name. Do you know what I'm talking about? Like when you're driving on the freeway.
Tanger.
Yeah, Tanger. Is that still around? You know what I'm
That's
talking
traded?
about, Dennis?
Yeah, the Tanger outlet malls.
Is that what is that? Is that
TGO?
the SK? It's SKT.
Yeah, it is. SKT, you're right. What's that thing?
Oh, that's
Same
not
thing.
good.
Same thing. We talked about this, but this isn't like we just brought this up for the first time. Joel was all over this trade back when TCO was 70s. This was back in 2017. You were talking about this. I remember. It probably didn't hold, but you were talking about short and buying long-term puts on this thing, and you were absolutely right. It wasn't a smooth ride, but you've been absolutely correct because the stock is now at 41. So it was a good call on your part. And this
Just makes sense.
This SKT is the same thing, 32. It's just common sense. A lot of times in the long run, it's just, think about the whole scenario and then use your common sense. I mean, that's the best tool for investing that you have is your common sense. Thinking about, do I see this product in the future 20 years from now? Or do I see it declining? Or do I see it, getting, accelerating? And malls, if you asked me 2 years ago, we were saying the same thing. I'd see mall traffic declining over the next 20 years. So I don't want to invest in mall retailers. I don't want to invest in property managers that own malls. There you go. 2 stocks that have been beat up because of that. I mean, SKT has an 8.69% dividend.
Whoa.
They're coming in there because they say, oh, it's safe. Well, is it safe? And Zagana at 8.6, I'm going to say it's probably not safe. So, I don't know. I haven't analyzed the fundamentals, but stocks typically don't trade down to 8, 9, 10% yields unless there is some major issues. So, you got to be cautious. But I mean, the best place for money has been tech. It continues to be tech. It is the main reason that the US markets have been outperforming the rest of the world because we know a lot of the major tech companies come from Silicon Valley, a lot of smart people. I mean, you think about it and you look at where the EEM, bring up a chart for the last 10 years, it's gone nowhere.
Nowhere.
Canadian markets have gone nowhere in the last 7 or 8 years. I mean, since 2012, EEM is flat. Since 2012, the Canadian markets are basically flat. Since 2012, the QQQ is up 1, 2, 3-fold. It's not, that's just common sense. The world's going to technology. So it's, and obviously QQQ has some other stuff in it too, but a majority is US companies. I mean, you're going to look at the S&P, same thing. Since 2012, the S&P is over doubled. There's a main reason for that is, US has a lot of good technology companies. In Canada, you struggle to find okay, who's the big Canadian company that you're going to invest in? BlackBerry? No. It was at one time. We have Shopify.
We talked about that.
Canadian company, and look how good it's been. And I honestly think the Shopify performance and the valuations that people are paying is because if you want to invest in tech in Canada, where do you go? There's not a lot of big tech companies, so it's not surprising that Shopify gets a lot of money, probably a lot of Canadian investment in that too. So, that's something to consider. When you only have 1 or 2 or 3 good tech companies coming from a country, those ones might do very well because of the local investors. This is an investing show it turned into all of a sudden.
All right. Well, no, this entire conversation started with the question
about Macy's.
But also what's going to be the catalyst? You've asked that question before to Ford.
Oh yeah.
Ford
Yes.
also has news this morning, and this is a catalyst this morning. Ford confirmed that Volkswagen is investing $2.6 billion in their AI unit.
I mean, they got to get, they know they got to compete with Tesla. They got to get, they're going, this is where the industry is going. It's going to full automation. It's just a matter of when it gets there. So they've got to invest in that. So that's good news. I mean, they're trying, they got to stop, just producing their gas guzzling, traditional cars, and they've got to start getting electric, and they've got to start looking at automation to compete, because Tesla's way ahead, and we know, Tesla's burning cash like crazy. But that's a different story. Obviously the valuations are crazy, and that's why I've tried to invest a couple times, but I can't stomach the valuation. But I mean, they've got to figure it out. Ford and GM, they've underperformed for a reason. Maybe headlines like this can start to turn it around. But I still wonder. You've had such a awesome environment for Ford and GM in the last 2 or 3 years, and the stocks have not performed. We've had low interest rates. We've had a healthy economy. The stocks have had, record sales. We've seen Ford and GM with record sales, yet the stocks continue to underperform. So, that's a concern. If the environment ever got tougher, what happens? So I'm still, jury is out for me on Ford. I obviously had Ford as an investment for a long time. I sold it last year, took the tax write-off, and maybe it was, a bad call because it's up a little bit since then, but, maybe not. I don't know long run. Yes, it's got a 5.8% dividend, but they got a lot of stuff still to figure out.
If it clears 1050, I mean, we've been saying
that's been the number.
Yeah. Yep.
1050 is huge, at least from a trading perspective. Now we're putting the trading hats on.
Right. On a daily, weekly, and monthly. And just speaking of Ford here, there's an old mall called Fairlane Mall, and Ford's out there at the Dearborn headquarters. They are converting part of the mall to like office space in workable areas for part of Ford. And then also they're working big on EV. They bought the old train station. I told you they paid an outrageous valuation, per square foot basis for the old train station, but they're going to try and make that the hub for electronic vehicles, and return the Motor City back to being the Motor City. But anyways, it's up today. It's up 12 cents. I just keep an eye on that 1050
on that headline from VW.
Yeah. Yep. So VW is traded over there.
So okay. We got 2 minutes here. We're going to get a major number. I just canceled my orders because Joel warned me. He's like, don't get picked off here again on the 8:30 numbers. So what do we got coming? Can we do a quick preview? And then I'm going to actually try to trade this number.
We got PPI. Is that right this morning?
Yes, sir.
And I haven't even looked. I looked very briefly when I got in, and then that's sort of it.
Yeah.
I used to having to look for econ data every single day on a non-jobs But
why don't you tell people how you do it in Pro?
That's a really good idea. So Pro's got
your Pro.
Here, I'll bring in my Pro here. I minimized it for the show, but we'll get it back up. And let me sort of walk you through what I would do. Basically, right here is a calendar we've got up on the screen. It's ratings though. I got to switch to economic data. So I'll just go here. I'll go to economics. I'm on today's date. Boom. Here we go. And this includes all econ data from across the world. So let's just get rid of all the non-US stuff here and go straight to US. Here we go, PPI and core PPI coming out at 8:30 this morning. Consensus estimate for PPI year over year, 1.6%. Core PPI at 0.2% month over month and 2.2% year over year. These three rows are the money makers here. And let's see what the number is in just under a minute.
Yeah. S&Ps are liking right here going into the release at the pre-market high is 1275. Really nothing there, folks. We're at all-time high territory. If we get a pullback, I like to see what happens at 3007.50. That was the exact all-time high from a few days ago. You had a couple highs in that area. We'll see if that acts as support here on a pullback. We are awaiting the number. Like I said, folks, on the upside, there's really nothing in there. And here comes the release out moments away. We got to get we got to check on our servers co-located in Washington where this news comes out, because we're not getting it before everyone else. And boom, boom. What do we got? June PPI data.
I'm still waiting. I don't see anything. Brent, you see anything come through yet? PPI. Brent,
Even stock hands saying it came in even.
All
I
right.
would say the way the S&Ps are moving, that it came in right in line. There's no ticks, down to 10.5. Nothing. Gold's going red. Now trying to stay green here. Nice range in gold. The core was strong. Implications.
In line, it looks like you're just across the board.
Oh my gosh. Dennis is going to yell at me for telling him to get off for this. Boy, this has been a non-event, folks. Sorry about
Cancel
that.
my orders for that, Joel.
I'm sorry.
I did notice S&Ps went to 20 cents wide, so the S&P futures probably went a point and a half wide on it. So
Yeah.
market makers backed off too. I wasn't the only one backing off a little bit.
Hey, balances real quick here on this
Yeah.
Sleepy Friday in July.
There's some interesting ones. It's a little bit interesting, but I don't really see anything like super strong or crazy. Bank of America 114,000 to sell, but I'll tell you, banks actually nothing really moved on that number. Like Citigroup
Nope.
63,000 to sell. So you got a few sell imbalances in a couple of these banks here. Holy, I'm scrambling to find stuff here. That's
Okay, no big deal.
Yeah. There's nothing really. I don't know JV Spec if you see some stuff out there. I don't see a hell of a lot.
This is real quick before we go to our guest here. Kind of a wild day in Amazon yesterday. You got up near within 15, 16 bucks of the all-time high. And I don't know if one big seller came in or what, but it had quite the intraday decline as the market moved around. Boy, oh boy, if you want a big old level to keep an eye on the downside here, and this is moving forward, you got a pair of lows within a dime at 1995.40 and 1995.30. So we're a good, 15 bucks away from there. So absolutely no downside in Amazon until you take out that 995. And if you're looking for a target on the upside, yesterday's high 2035.80.
You know what the big headline that we didn't talk and the big news last night there? ILMN, Illumina.
Oh, yeah.
Got the beats. So they came out. Spencer, give us the details right at 4 o'clock, right at the close. They came out with some numbers and they were not good.
They came out with some preliminary guidance, I believe, and they said Q2 sales are going to be around $835 million. It's about $50 million below the estimate. They also cited they gave some sequencing sales numbers that are going to be down slightly. Sales growth for the year around 6%. Just all around, I think, just lowering guidance from where it had been.
Yeah, and if I'm looking here, just looking at the ILMN, it is, if I go and look under the hood, it is a huge component in the IBB. It's 7.1%. So if you're wondering why the IBB is trading down 1% here this morning, it's all ILMN. That's your whole catalyst here. Obviously, when a stock falls 15%, it's 7% of an index. You go 15 times the 7, it's almost 1%, I think, I'm doing that math quickly, but it's about 1% just for that stock. So IBB has to adjust down 1% just for that stock. BIB is 6%, so that's going to be down significantly. BBH, it's 5% of that. That's going to be down here this morning. Those are the biggest ones. I mean, there's some smaller ones. UBIO is another one that's got 5.6% of it. But, it's sometimes good to look at those ETFs. So you're wondering why your IBB is trading down because it's got a big chunk of ILMN in it.
13 points off its pre-market low of 299.05. And it just looks like right now, I'm not going to say the low of the day is going to be in, but you had the spike low on the print at 99.05, and then people started nibbling at 300. Then their bids didn't get hit at 300, and they went to 302, and then they went to 304, and they went to 307. So just based on that price action, I think if you do get a whack back down, I think it might be hard to get to the pre-market low. I mean, also, I doubt if the options are that active in this, but if you had the weekly 360, 350, 340, 330, 320 put, you're taking a flyer on this on a Friday, you wake up and you're like, you hit the mother load. So that's why I think you see some buying in there today. On the daily charts, you had a low at 302.72. So I'm looking at that area, much better area to cover short than to try long.
All right, I want to bring on today's guest. We're going to take a quick break while I dial her
Sure.
up. Raghee Horner, she is a Forex and currency trading mentor at Simpler Forex. So we'll be right back in a moment here with Raghee.
Good morning. This is Raghee. Oh, it's 8:35. My gosh, where did the morning go? Fantastic. I'll put my headset on. Great. Thank you. Thank you, my friend. Appreciate it.
All right, welcome back, everyone. PreMarket Prep, Spencer Whitfield, and Dennis Dick, joined now by Raghee Horner, Forex and currency trading expert for Simpler Forex. Raghee, how's it going today?
It's going well. I'm watching this tropical storm head up towards Louisiana and got an eye on crude oil and natty gas, but it's a Friday. We'll see how this market wants to end the week.
Well, let's start with the obvious question here. Is the U.S. dollar too strong?
I take a look at the U.S. dollar, and it's always a relative performance game. I think right now the market's going to sell it off because we have an accommodative Fed, but I don't think it's too strong because that's as if we can look at the euro and say it's too weak. I've got to find the market that's too weak on the other side of the too strong dollar. Until I can find that, I don't think so.
So how are you sort of approaching the various different Forex markets right now in light of what we heard from Jerome Powell this week?
Yeah, I love it. Great question. So I think everything that's been focused on Jerome Powell really should be much more focused on, say, the ECB, the outgoing Mario Draghi, and possibly the incoming Christine Lagarde. So if we actually have someone who might be as accommodative as Lagarde may be, we could actually see the euro start to cut rates. And that's going to prop the U.S. dollar up. So until I have a really firm bullish outlook on the euro, it is impossible to be that bearish on the U.S. dollar. So I've kind of moved on from what Jay Powell has said. I think the real play for traders and investors is going to be, what are they going to do in September? Because July is done. Put a fork in it. We're going to get our 25 basis point cut. But what does the market think we're going to see in September, which is probably going to be another 25?
So you're not in the camp of the half at all, which some people are begging for.
You know, I think a lot of times that the half conversation is an interesting one to have. And I know there's a lot of hyperbole and oftentimes a lot of panic and over discounting. But I think that would ultimately signal, if they actually cut 50 basis points, is panic. And the same people who say we need 50, if they actually got it, would turn around and say, well, Jerome Powell and company are panicking. So that's kind of the other shoe, right?
Yeah. So
they can't win.
Should we get off our soapbox that they don't even need to go a quarter? I mean, I know the Fed funds rate is baking in it already with a pretty high probability. Doesn't really seem deterred by the good jobs number on Friday. I mean, when I think of QE and I think about lower rates and stuff, man, I kind of like to think that that's reserved for some financial crisis, and with the market at all-time high, unless, I mean, the other way you could look at it is that Powell and the Fed, they're seeing some data down the pipe that we have no idea about. So why isn't the market nervous about that?
I love it. Let's put the Kool-Aid down, right? Why on earth are we talking about 3,000 S&P, 27,000 and change Dow, and we're talking about how we need rate cuts? I think this has to go back to something that, a lot of Fed watchers will realize is their models are antiquated. Let's look at their inflation model for a second. They used the PCE. We just got the CPI the other day. Nobody on earth but the FOMC uses the PCE to model out inflation from a rate of change standpoint. We all use CPI. And yet you take a look at the way the Fed looks at the data out there, it might as well not even be from earth, but at the same time, they're the ones making the big decisions, so we have to follow along. But you're right. It's absolute nuttiness that we are talking about the sort of data we're seeing, whether it's the sort of Fed version of the data or more of, I think, the realistic man on the, the guy putting gas in his truck going, what do you mean there's no inflation? Come down to my world. There's such a disconnect, right?
Yeah.
But I still think they're going to have to cut in July and September.
Just to make the market happy. How about, okay, so we talked about, get a little bit more about the U.S. dollar here. We get a lot of questions on the U.S. dollar, and, Dennis and I really don't trade the foreign currencies that much, or the dollar. Dennis has to pay more attention to the Canadian dollar. But I mean, it's been a stealth rally here in the dollar, just kind of holding steady. I mean, taking rates down, you think they might hit the dollar a little bit. What's gonna get the dollar off these highs, or are we just gonna break out and continue higher?
Well, one thing you mentioned, if I could backtrack for a sec, is talking about the Canadian dollar. That loonie has been on fire. That's one of the best trends in currencies right now to actually buy Canadian dollar, sell euro, buy Canadian dollar, even sell the U.S. dollar. But what's going to knock the U.S. dollar off its perch? I think the one thing, whether traders look at the foreign exchange or trade, currency futures, which are at well over 250 billion turnover. So there's some good size there on the futures side. They could take a look at the FXE ETF or the UUP and still get a little bit of skin in that currency game. But I still feel that as long as the euro is going to be stuck around the 113.50 to 114 on the spot, there's very little chance that the dollar starts to sink, because those two have that negative or inverse correlation. So in order to be, again, it's really the mantra I have. In order to be a dollar bear, you've got to be a euro bull. And the last time I looked at the data in Europe, it is a hot mess. You do have Italy, flirting with recession. You do have a central bank that did not hike last April when they could have. And they're going to be in a situation where they're going to be flirting with negative interest rate policy again. I think that's bullish dollar. I think that's bullish gold.
And, one of the big arguments too for the rate cuts are, the rest of the world's doing it. We need to help the global economy. I mean, if there's anything we've learned over the last 7, 8, 9, 10 years, is that no matter what we do here is really not going to help those economies. So what, a little quarter, a half, or whatever, what is that going to do to stimulate these global economies? Also, while, we got a trade war with China, we maybe start one with France, we had a short one live with Mexico. I mean, put the dots together on this.
Oh, we haven't even made up. We're also, with the UK and the US, we're nowhere near either. I think we started one with India. So yeah, we've got trade wars on a lot of fronts, but it's interesting. The market, I think the bond yields are forcing the Fed's hand. They know what the market's baked into the cake. You take a look at, say, the Fed fund futures and those target rate probabilities for July and September. They know what the market's expecting, and then I think their hands are going to be forced. But at the end of the day, is it the Fed's job to keep the stock market up? No, but we do know what's been keeping the stock market up is cheap money and corporate buybacks. I mean, we're going to look at the second consecutive year of absolutely bananas. It's the level of corporate buybacks, and with the high concentration problem we see in most ETFs and indices, it doesn't take much to keep these indices going to higher highs as long as you're buying the likes of Microsoft, Apple, etc. So that's where I look back to just corporate buybacks and the Fed's hand in that, keeping money cheap and fueling that.
Well, what about other areas in the market here? You're talking about buybacks. We've had we had a big first half for IPOs, a big first half for M&A. So do those signals tell you anything on top of, record buybacks, which we've had now for like 2 or 3 years at this point, and a strong dollar? But does that color anything for you?
I think, again, when I look at strong or weak any currency, it's always relative. And I think as much as we might get accommodative in the U.S., that's going to cause every other central bank to try to outpace us. So you already see the Reserve Bank of Australia cutting rates. The RBNZ, the New Zealand Reserve Bank, is probably not far behind. Like I said, I think the ECB is going to have to. So even when we start cutting rates in the U.S., everyone else is going to. And then everyone's going to talk about a currency war all over again. But as far as the place for corporate buybacks and that weak dollar, or at least just how cheap it is, the money supply, when you lay a chart of money supply, an M2 money supply, parallel with the S&P 500, you see exactly why we head up. As long as money remains cheap, the equity markets love it. And relatively speaking, the dollar is still pretty expensive compared to everybody else. It is going to be a little bit cheaper, but I don't see the dollar weakening against the likes of the euro or the pound anytime soon. The yen could be a different conversation, and right now the Canadian dollar is just kind of the stud of the Forex market.
Can you give us one Forex pair on your radar for a trade today?
Sure. So if someone's looking for a trade near term, and this is going to be a little risky, but it kind of plays off of sort of the wake of Jerome Powell, if we get the euro trading down to about 112, the 112 handle, I think that is a very nice short-term buy for a bounce, where I'd really like to see traders just take that elevator ride to the upside and then reshort the euro around the 113 to 114 handle. We are stuck in a range, and the market really doesn't know what to make of just how serious Jerome Powell is about September, and quite frankly, just how accommodative. We can't take the ECB out of it. Lagarde is going to have to be. My bet is on weaker euro, which is absolutely a bet on stronger dollar going into Q3.
All right, Raghee Horner is a Forex and currency trading expert and mentor for Simpler Forex. Raghee, always appreciate talking to you. Have a great rest of your day, and have a good weekend.
Thank you both. Love it.
All right, have a good one, Raghee.
Thanks, Raghee.
8:46 here, Joel.
Just hanging out near the highs. I mean, we had to maybe a point and a half dip, but going into the 9:30 open, we still have 44 minutes, so a lot could happen. Just hanging out at that pre-market high at 1275. I mean, I gave you some crazy targets yesterday based on the 9-day average trading range, and that would take you close up to 30.30. But we'll see if we have the gas to do that. That would be a really big move. First things first, let's take out that pre-market high of 1275. I noticed this Hildebrands is still going down here. HI
punish those things, man.
I know. Holy mackerel.
I wish I could have got short at 38.
You should have just locked it down. You should have just locked it down at 35. And you wouldn't even have got it because the first
third person and you're gambling. You're selling it down at 35 with no market at all and being the first one, you're gambling a bit.
Right.
So, I was fairly confident that it's going down. So that's why I'm willing to sell probably 38 and up. But, I guess you're in 37, 37. I don't know how much it's going down. I had no idea it's going to drop 16%. But, I mean, we've seen this again and again. The acquirers, in some cases, are getting hit harder than the stock getting taken over. And we're getting close to that in MCRN. It's only up 20% now. So can they knock, the question is, can they knock HI down more on a percentage basis than they buy up MCRN? It's incredible.
It's those pops, man. How many times have you seen these pops and stocks getting taken over, and then that initial surge is, where the gravy is? That got up to over 1750. That was the high, but of course, 1750 was the high. Of course, though, as HI declines, so does the price for MCRM. Still a nice gain for shareholders, up 20% at 1630. Des, before we go into the ratings here, just see could you recap some of that pharma action that you had off the open? I think you mentioned it on the pre-market show, and just kind of what your idea was, your follow through, and we know you FIFO'd out of it, but can you just walk us through that?
FIFO out of everything, but we know the health insurers were going up on that headline yesterday from the White House. What was that headline again? Just Spencer, you just go back into the pro, just grab the headline so everybody's informed that maybe they weren't here yesterday.
They got rid of the rebate program.
Yeah, so this was popping all of your health insurers. They had a huge day. Stocks like CVS and Walgreens had a huge day. But then we started noticing a trend. I was noticing this even before, we started the show. Like 750, I was trying to ask you. I was like, okay, Lilly had news, so it's going down because that's some bad drug news. But I was like, I'm seeing Pfizer go red now. I'm seeing Merck go red now. I'm like, are they going to hit all the drug stocks on this? And, and obviously I don't follow close enough to, all the fundamental implications of how this works. But I'm like, it sure looks like they're going to hit the drug stocks on this. So I'm not sure if we had a chance to talk about that in the pre-market show. We get on our tangents and I never did. But I remembered that. And then at 9, 15, 9:20, you could easily see Merck's getting hit hard. Pfizer's getting hit hard. Lilly's hit hard because they had news. But you're starting to see other drug stocks roll over. I'm like, you know what? I think they're going to hit the drugs hard on this. So I threw shorts out on every stock I could possibly think of in the drug sector I got some obviously, and then I didn't get some other ones because they were opening too low. But bring up these charts. Like I got short Bristol Myers at the open. I got short Celgene at the open. Those obviously trade together. I got short AbbVie, ABBV at the open. I got short ABT at the open. I got long because I was trying to I got short XBI at the open. I got long LABD because that is the biotech bear. And I was like, I'm just trying everything. I put orders out on everything. And I got long LABD at the open. I took zero heat on all of these trades and they just exploded in the direction, because I made a good call. I made a good call for myself, obviously. Getting short all those stocks, and I do FIFO out of everything, Joel. After like 15, 20 minutes, I'm out of them all. And you look at the end of the day and you're like, man, I should have held that LABD long. I should have, held on to that XBI short. But, I was talking with somebody yesterday and he's making a good point too. That, you're always going to notice those times that, selective perception that you could have made more money.
Yep.
And you're maybe not going to notice those times where it actually would have turned around and you locked in and you actually ticked, close to the bottom and you locked it in. I mean, especially me, because I'm kind of glass half empty when I'm trading, a lot of times. I don't know why I'm like that, but I feel like I'm like that. And, I'm not going to notice those times that it was a good call to cover early. So, locking in the profits isn't that bad of an idea.
And also, the other thing that we talked about on the pre-market show is that another reason why that trade worked out for you is that people were looking at those stocks and saying, oh, well, this is good for pharma, right? So I got to buy these.
UNH and the XLV, and they're thinking maybe they're good for pharma. There was like some of them opened up. I mean, Abbott Labs opened up. Like on a day that Pfizer was getting killed, I mean, Abbott Labs opened up, I think, 25 cents. AbbVie opened up. I mean, this was, and look at the chart. Like, look at the intraday chart. It opened up and just collapsed. And, the LABD opened up right at the very bottom and exploded. So, like, I mean, you're up 50 cents in that trade before you can blink. So, there's good moves, and obviously continue to go over the course of the next couple hours. But so I still leave a little bit of meat on the bone. But, I'm one that takes a few bites, and I guess I throw it away too soon. But I mean, in any regard here, if you can identify a sudden, trend and a change in trend like that quickly, you can make some money. And I was able to identified it early in the pre-market, and I traded it, and I felt convicted about it, and I felt convicted enough to throw shorts out on every single drug stock off the hop, and it worked.
You did that manual, right?
XBI opened flat too. I mean, that was just, you gotta, and not that XBI has a lot of the major pharma in it, but I mean, they're all going to kind of follow suit, right?
You did all those manual, right? You don't have
OPG too. So I'm getting fill on the open. An OPG order is fill on the open or cancel the order. So if you don't get the opening print, it's automatically canceled. Because I don't want to sit an order out there and then all of a sudden it turns and I start getting picked off and everything. I was making the call that I think, any drug stock that's opening up right now, I think is going to fall just because of this news or opening flat. So I was willing to sell any drug stock that was basically opening slightly down to flat. I mean, I even went down a little bit because I think Bristol Myers opened like a nickel down or something from the open. But look what it did. I mean, it opened like 45.80 or 45.85, and within 10, 15 minutes it was 45. These are big moves. So there's opportunities there if you can identify quickly, those turns. And that's what I was identifying, was that the pharma was weak off of it. You could see it in Pfizer, you could see it in Merck. Lilly had its own news, so it's hard to use that one but you could clearly see a trend happening at 9:25 in the morning that, hey, they look like they want to sell these drug stocks. And maybe there's a few people who haven't identified this trend yet. And that's what I was taking advantage of.
Just real quickly, getting a question on the XBI here, which the chart doesn't look too bad here after making that all-time high in 101 and change, 101.55. You had a big old break down to 64. So that's 74, 84, 94, 100, about a 38-point move. You add 19 onto that, call it 20. Looks like if we could hold in here at 85, 84, 85, looks like you got a chance to go back and test that 100.
Hard, though, just from a technical perspective, because look at a chart.
Middle of nowhere.
Yeah, well, and look at the chart of Merck. This was a collapse yesterday for Merck. Merck was down significantly. Pfizer, this is a collapse. I think it was a turn in trend, and it was a turn in trend due to that White House news coming out. So I would actually probably be a seller of XBI on rallies here now. IBB has its own issues here today because it's full of ILMN, and that's going to be down again just because of the Illumina holdings in it. But I mean, there's other holdings in there too. I mean, you're going to see a bounce maybe in a couple of these stocks this morning. I know Merck's trading a little bit higher. Pfizer's trading, trying to trade up a little bit of a bounce trade. But, when you see, wicked moves like this, candles that happen like this, and this is where Jeremy Newsom would be good to analyze this as well. If you're listening, Jeremy, I'll give you a shout out. But when you see an outsized move like this, you've got people caught. People are caught long this. They've been playing it, and they're like, oh my goodness, I bought Merck at 84. I thought the trend was still intact. The thing is 80 on me. So it comes out up to 82, 83. They're going to be willing sellers up here. So now you've created an overhead supply issue. And I'm somewhat talking against my book because I'm obviously still long Merck in my long-term investment portfolio. But I'm just saying from a short-term trading perspective, I think bounces are to be sold in all these pharmaceutical stocks now.
All right, Spencer, the analysts woke up pretty bullish on the bullish side of bed today, and we have some pretty significant upgrades that are moving stocks. Why don't we bang out a couple of those before I head up to the great northern Michigan and Harbor Springs?
I would say the theme of the day is banks commenting on banks. So
yeah,
we have UBS upgrading Deutsche Bank to neutral this morning. Very contrarian call. We have Citigroup upgrading Morgan Stanley to buy, and they're also downgrading Wells Fargo to neutral. So big banks commenting on big banks this morning. That's always interesting when you see that happen. And on top of that, let's start with those three here. So we have an upgrade to Morgan Stanley, an upgrade to Deutsche Bank, and a downgrade to Wells Fargo.
We saw Wells get downgraded yesterday, and I think it was yesterday, wasn't it? Didn't Wells have a downgrade 2 days ago? Wolf?
It was this week. It was
Wolf Research, and it kind of shrugged it off. I mean, these banks, we're going to move around with the TLT to a certain extent. And full disclosure, I do have a position on Wells Fargo, so I guess I should limit my commentary there. But, keep in mind, the banks, when they get upgraded or downgraded, they don't have these 2, 3, 5% moves. They move a 0.5% on it. It's not, they're big, they're widely traded, they're thick. They're not going to have huge moves on these.
I just don't know what the driver is for, the banks here moving forward. They have nice dividends,
a hawkish Fed.
Yeah.
If
that's it, I mean,
well, I don't know if you're going to get that.
Why don't we just take that word out of the dictionary?
Pretty much.
It doesn't exist. Just take a quick look at Morgan Stanley, one stock that really hasn't recovered from the financial crisis as much as the others. It has recovered. $45. If you get near there, you snuck there over the pre-market. Keep an eye on your July 1st, your monthly high at 45.06. And let's just talk about Snapchat. Snap getting love from Goldman Sachs.
You got a little feedback happening in your mic, Joe. I'm not sure what that is.
Is that me?
I hear a little bit, but anyways, yeah. So Snap and SFIX both coming out. Goldman upgrading both of these stocks, both getting big lifts here in the pre-market.
No less.
So yeah, so Snap's been hot. I mean, we haven't talked about Snapchat a lot. I was playing it I think it was last summer when it was starting to have some runs. I mean, now it's really, it wasn't last summer. It was in the spring when it was having runs.
Yep.
And now it's taken off here again. I mean, Goldman's coming a little late to the party. Sorry, Goldman. I mean, it's had a big run here already. SFIX it's more of a contrarian call because it's been coming down. So, this one, maybe has a little more work. I want to see what SFIX does at 30, but Snapchat's had its wind in its sails for a long time.
All right, I mean, it's a big move here. Whatever the reasons are for Snapchat, it is moving higher. Pre-market high comes in at 1628. You're not too far off that level. Man, I'm going to go to my monthly charts. I don't see a lot in here. I see 16 was a significant level back in April of 2016. So longer we hold 16, and your next monthly high comes in at 1851. I'm sure you could find some other intermediate numbers in there. And to fill the gap from yesterday, you're not too far from that. 1594 was the top of yesterday's range. So if you're wanting to get a quick pullback on the sellers off the open, perhaps 1594. And I just want to mention, Goldman Sachs gave that goose to Comcast the other day, and I tried a small short in it, I mean, I did have some decent profits in it that day. It did back off like 70 cents, but I was slow on the trigger on it, but, covered it yesterday for a small loss. But look at this, 44.14, 44.13, 44.08. I mean, is this the time to I know you're not bullish long-term fundamentally on this, Dennis, but man, oh man, could this be, one of these breakouts above 44?
It wants to try to break out,
Yeah,
but
it
we
sure
had a
does.
catalyst yesterday and it didn't really go with the Goldman upgrade. So I don't know.
2 days ago. That was
2 days ago.
ago.
I mean, I've been wrong on this one. I'm not like Comcast stock for a long time. It's been going up. It's sitting near all-time highs. So I'll say, I've been wrong on this one so far. I think I'm going to be right in the long run, though. I don't want to own Comcast.
Okay. All right. Well, you guys are going to have a busy week next week without me getting started with earnings. I think I'll be back on Friday, though. Spencer, you want to preview what's on the docket for next week?
Mostly just earnings, as I understand it. We do have an IPO next week on the Ambev IPO on the Hong Kong market, but next week we are looking for earnings as I pull my list up. The banks are reporting. We're getting Netflix next week. We're getting eBay. We're getting Honeywell, UNH, Microsoft next week, American Express. So it is really the first week of earnings season. So we made it. We made it through the doldrums of the in-between earnings slog, and we are here now at the Q2 earnings season. So that'll be the theme of next week's shows. I want to thank our guest today, Raghee Horner. Thank all of you in our chats on YouTube and premarket.benzinga.com. Any questions, comments, concerns about the show, email us premarket@benzinga.com. Please remember, all the information from our show is meant for informational purposes only, not meant for investing advice. And everyone, have a good weekend. We will see, well, Dennis and I at least, will see you on Monday morning.